Hello, investors. Welcome to the channel where we look for possible swing trades using technical analysis. Before we begin, all I ask is that you hit the like button and subscribe. It really helps out the channel. And with that, today we're taking a look at Caterpillar Incorporated, ticker symbol CAT. This is a large cap company with a market cap of $115 billion. They're in the machinery industry and they construct heavy equipment, best known for bulldozers, mining equipment, and other heavy construction devices. And here we are on Caterpillar's annual chart. You'll see the share price has recently fallen quite a bit. And even this earnings beat is not enough to bring the share price back up. In fact, there was a gap down just a couple of days ago, and we did post a solid candlestick yesterday, solid green candlestick, I should say, but it is not enough to fill this gap. Now, the gap down on earnings is a little strange because Caterpillar posted a 15% earnings beat. However, the guidance offered for future quarters here is not what was hoped for. So you end up with the share price well below where it has been. And if we look down here at the RSI, you'll see it is oversold, but rising out of the oversold zone right through that sweet spot. You have the stochastics are both oversold and rising. You have the volume chart with a recent significant spike, but the volume appears to be declining. And at least yesterday we had a green candle, although the last several days seem to alternate red and green. So the predominance of red lately, of course, won out, but it does look like with falling volume and a couple of green days lately that it does look like it is switching back over to buying pressure. And the MACD here is well below zero, and it looks to have formed a trough, although it's hanging out down here for some time. It does not look like the lines are converging. So I can't say we have a bullish cross at any point in the near future, but at least it doesn't look like it's falling any further. And if we switch over to the fundamentals here, you'll see that Caterpillar has a low short interest at 1.2% and solid institutional ownership at 69%. Debt to equity ratio here indicates that it has more debt than 84% of other companies in the industry. Of course, debt works same for a business as it does for you and me. However, this is the least concerning negative metric. I find that because this is something where they need large amounts of equipment and land and space and storage to conduct their operations, that this is not quite as concerning as it would be in perhaps other companies. So then we move on. The PE ratio is average for the industry at just below 13. Gross margin of 35% is outstanding, and it beats out 85% of other companies in their industry. And then the operating margin of 17% is even a little better, beating out 89% of other companies in their industry. And I'll point out a net profit margin of 13.61% is likewise good and does not show that a downturn in the market or increase in costs is likely to make the company unprofitable anytime soon. When we look down at return on equity, is excellent. Over 50% return on equity in this industry is amazing. And then that beats out 96% of other companies in their industry. And the growth rate is average for the industry. The dividend yield of 2.18% is well above average for the industry and above average for the market in general. Payout ratio just above 20% shows that that dividend yield is quite secure and can continue to be paid or raised for a considerable time in the future. And a quick look here at the analyst reports. You see the average analyst price target is just over $278. Take that for what it's worth. You can use your own judgment there. And one final point I'll make here on CAT's earnings, since they did just have an earnings beat lately, so you may wonder why the share price fell so drastically. And that's because the projected earnings were not showing much growth. And you can see these last three gray bars here are the projected earnings for the next 3 quarters. Now, it's important to note that this bar here, this very first gray bar, this represents the projected earnings for the quarter just reported. So they projected $4.79 a share, and what they got was 15% more than that. And what you can see is, if you look back here, every single quarter back into 2021, the company has beaten expectations. So even though they projected earnings that were basically in line with only slight growth for the next 3 quarters, it seems likely to me that these are conservative estimates and the company's actual earnings will exceed these numbers, which should drive the share price back up. But please let me know what you think of Caterpillar in the comments below. And if you enjoy having ideas like this one sent directly to you, please hit the bell notification to be alerted when new videos post. Remember, I'm not offering financial advice. I'm not a financial advisor. These videos are for entertainment, discussion, and education. But if you'd like me to analyze a specific company using these metrics, just let me know in the comments and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.